The real danger is the quiet tax mistake that can push you into a higher tax bracket without you even realizing it. You see, the real danger is quieter, sneakier, and hits your tax bill like a linebacker at full speed. It's crossing an IRS income threshold without you realizing it. You sold a mutual fund to rebalance your portfolio. Seemed harmless at the time, but that gain nudged you into a higher bracket. If you stay with me for another minute, I'll show you a simple tool that I use that can save you thousands before the year's out. Most people only realize this mistake after their taxes are filed. You know, it's kind of like finding out that your umbrella is broken after you step out into a storm. Most people think the biggest threat to their year-end savings is overspending at the holidays. Simply isn't true. The real danger is the quiet tax mistake that can push you into a higher tax bracket without you even realizing it. See, I know this because tax season for my clients isn't just March to April, it runs from January through December. And this mistake shows up more than any other. So, in this video, I'm going to show you the one move that wipes out your year-end savings, why it happens, the 3 IRS tax thresholds that you need to watch, and what you can still do before the end of the year to stay out of trouble. So, let's get to it. You see, the real danger is quieter, sneakier, and hits your tax bill like a linebacker at full speed. It's crossing an IRS income threshold without you realizing it, and triggering a higher tax bracket or surtax if you didn't plan for. And the worst part, it's shockingly easy to do, especially in November and December. You've got bonuses, capital gains, RMDs, they all pile up so fast. But if you know the warning signs, you can avoid the penalty and keep those savings intact for goals that you actually care about. Here's the kicker. The mistake doesn't just hit your taxes, it cascades into everything else. Things like college aid, Medicare costs, even next year's savings. Because once your income lands in the wrong bucket, every downstream formula starts treating you differently, and in not a good way. Clients tell me, Tim, I didn't do anything unusual this year, but in November and December, ordinary gets expensive really fast. See, here's the mistake. People assume that their tax bracket is simple. I make this much, I'm in this bracket. Simply not true. One unexpected income item, a vesting of an RSU, a capital gain distribution, or a big bonus can push you into a higher tax bracket or trigger these hidden taxes. For many households in that 45 to 60-year-old range, this shows up as, why did my refund shrink? Or even worse, why do I owe this year? Because even a small jump can expose you to the 32% tax bracket or 20% long-term capital gains rate or the dreaded 3.8% net investment income tax. These thresholds are not intuitive. They're traps, and you only see them after the damage is done. For example, you sold a mutual fund to rebalance your portfolio. Seemed harmless at the time, but that gain nudged you into a higher bracket. Or you took your RMD but forgot that those inherited IRAs have separate rules. Suddenly you're stacking income that you never intended to have. Or the classic, the holiday surprise bonus. Wonderful gesture, awful time. Hey, if this is hitting a little too close to home, do me a favor, hit the like button. It tells YouTube this is the kind of real-world financial guidance that people actually need at this time of year. Thanks. Now this absolutely matters before December 31st, because after that date, your options shrink fast. You can't undo your gains, you can't reverse your bonuses, and you can't magically reclassify your income. So this is your last window of opportunity. And if you're helping aging parents or sending a kid to college, tight margins might make planning hard enough. But this bracket mistake usually hits at the worst time, the end of the year, when cash flow feels tight and mental bandwidth is low. But if you stay with me for another minute, I'll show you a simple tool that I use that can save you thousands before the year's out. Most people only realize this mistake after their taxes are filed. You know, it's kind of like finding out that your umbrella is broken after you step out into a storm. But you're here, which means you want to get ahead of it. And that already puts you ahead of most people, juggling careers, aging parents, and college deadlines. The first thing you need to know is the IRS thresholds that actually matter. There are 3 big ones that most people overlook. Threshold number 1 is the jump from the 24% bracket to the 32% bracket. Happens around the $197,000 mark for single filers, $394,000 for married filing jointly. You can find all this in the checklist below. Threshold number 2 is the higher 20% long-term capital gain tax. This happens when your income crosses $533,000 for single filers, $600,000 for married filing jointly. And threshold number 3, it's the 3.8% net investment income tax. That's when your marginal adjusted gross income exceeds $200,000 for single filers, $250,000 for married filing jointly. Now, cross any of these by even $1 and that wipes out everything. So here's your move. Identify what income hasn't hit your return yet, like bonuses, RMDs, capital gains distributions, all of it. So if you're even close to one of these lines, you need to know now. Staying under could save you thousands. Sometimes the smartest move isn't just reducing your income, it's shifting to the type of income. Think about Roth conversions, charitable bunching, or retirement contributions. All these can change the math. And these aren't tricks, they're timing decisions. And right now, timing is everything for you. And so you're probably thinking, hey Tim, how am I supposed to track all that? You're not alone. That's why I use a one-page checklist with every client this time of year. It shows us which thresholds apply, what moves still make sense. It's check the box simple, but incredibly powerful. Because clarity is everything when you have only a few weeks left and 10 different demands pulling at you. So if you want to go into the new year without a surprise tax bill, download the checklist I've linked below for you. It walks you through your big December decisions, from brackets to RMDs to capital gains distributions, and any last-minute savings opportunities that might be out there for you. And if something feels too close to call, go ahead, grab 15 minutes with me. One conversation can prevent months of frustration. And the bonus? Doing this cleanup in December makes February tax season a whole lot calmer for you. So, while most of your friends are scrambling, you'll already be ahead. You can focus on opportunities instead of doing damage control. This is your final runway to protect this year's savings. Let's make sure the IRS doesn't get more than they should. You've got enough on your plate. Let's finish the year smart and set up a cleaner February for you. You don't need to be a CPA. You just need to know which levers matter to you. And if you want a second set of eyes, even 5 minutes, I'm here for you. If you want to keep going, the next video is right here for you. I'll see you over there.